Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about USDJPY. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect for this market. Then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support zone and rejecting it to the upside. Already in the past, in multiple occasions after testing this zone as support, the market has rejected it to the upside quite aggressively. And what we can see is that just now we had yet another test of the zone and rejection to the upside, in this case also fueled by strong institutional buying. And that is something that we will speak about in just a few moments. But for now, let's keep in mind that here on the monthly, we are rejecting historical monthly demand and support. And let's drop down on the weekly time frame. Now, from a weekly perspective, what we can notice here is that we just had a perfect inversion of trend. The market went from the creation of weekly lower lows and lower highs, so we had a clear weekly bearish trend, to then having a triple bottom created at this zone. We had the first bottom here, second one here, and third one here. And the market then inverted to the creation of weekly higher highs and higher lows. That is a perfect example of a textbook case of inversion of trend with, in this case, a triple bottom being the inversion pattern. Because when you see lower lows and lower highs, then for 3 times in a row, the market fails in creating lower lows and then inverts to creating higher highs and higher lows. That is a perfect example of an inversion of trend, with the triple bottom being the inversion pattern. Now, if we have to identify the structure, in this case, it would be clearly here. And in fact, we can see that easily also on the chart. This is the structure that the market has been respecting. This was the previous support, turned resistance here and here, which the market, after breaking it to the upside, continued respecting as support on this retest and is currently rejecting to the upside. So here in the weekly, everything has happened exactly as you would expect in a situation like this from a market structure perspective. Just a quick interruption, let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Let's keep that in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is very clear. Now, I spoke about USDJPY just a few days ago when the market was breaking out from this previous level of structure, and I explained all the reasons for which after a breakout to the upside, I was expecting the retest and rejection to the upside, which is in fact exactly what the market gave us. Then I made another breakdown after this impulse and correction, explaining all the reasons for which from here I was expecting the market to continue higher. And again, that is exactly what the market did, creating this new impulse leg. And by the way, I will link in description these two previous analyses, so you can go and check them out for more free education. But at the moment, what do we have? Well, at the moment, we have a market which here on the daily time frame is testing a quite important structured zone. In fact, what we know is that this level here, which was acting as previous resistance preceding this rejection lower, and again was respected as resistance here preceding this rejection lower, well, this exact level has now been broken to the upside. So all this previous resistance is now turned support. So from a horizontal market structure perspective, we are now testing previous daily resistance turned support. What we can also notice is that as we have an impulse and correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have actually quite strong confluence of demand and support inside of this level, because if we extend it here, we can notice that this zone is not only the previous resistance turn support, but it has also the 0.3 to 50% and 0.618 Fibonacci retracements, all lining up in the same area of structure, therefore creating a confluence of demand and support inside of this zone. And when you have a confluence of demand and support zone, you have an increased probability of seeing institutional buying inside of this zone. And we will be speaking about institutional buying right now by moving to the commitment of traders analysis. Now, the first thing that we have to keep in mind is that we are missing the data for the very last few reports because the US government is currently in a shutdown. Now, this has now been basically the longest shutdown in the US government history, so I expect it to be over quite soon and that the new data should resume it being released as usual. But for now, since we're missing the very last few reports, we have to follow what is the trend that institutions had. Because as we know, since there isn't enough liquidity in the market at any specific moment for institutions to just click the button and buy or sell the entire amount they want to buy or sell, they usually spread their orders in time. So you always see a long trend of slowly institutions shifting their positioning and preparing for the next move in the market. So by following this trend, even if we're missing the very last few reports, we can understand what was the trend, what were institutions doing, were they moving back to the bullish side or to the bearish side for USDJPY. Now, looking at the net positions, we can see that the trend was that institutions were decreasing their net positions. We went from 179K net positions all the way down to only 79K net positions. So we had a 100K decrease in net positions, meaning that institutions were increasing their shorts, going from 21K all the way up to 96K, and at the same time they were decreasing their longs, going from 204K down to 176K. Now, what does this mean? Well, if institutions are shorting the JPY and closing their longs on the JPY, so they are effectively shorting aggressively the JPY and they expect the JPY to get weaker, they are longing USDJPY, because if institutions short the JPY and all currencies on the spot are traded against the USD, they are longing USDJPY. An easier way to remember this is that JPY getting weaker means USDJPY getting stronger. But effectively, all currencies are traded against the USD. So institutions are longing USDJPY. So let's keep that in mind and move back to the chart. So immediately now, knowing that, it comes at no surprise that the market has been in an uptrend because institutions have been longing USDJPY by shorting the JPY. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection higher away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day. essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.